but stay with me on gold because I want to show you guys something. Because if you looked at this number, if you only looked, here's something to think about. If you only looked at the top section here, you might draw the conclusion, oh, look, gold looks really bullish. That must mean that institutional money is backing gold, and so we should buy gold, right? But stick with me because I want to show you something really important about this, okay? If we scroll down, this is showing us possibly even more important data right here, right? So the US dollar also showed a sign of bullishness. Now hold up, because again, remember we talked about gold. If a strengthening dollar is happening, that's not great for gold. So let's go take a look at gold. Well, gold saw it's the most bearish on our list this week. So the data shows positions have been moving bearish overall from institutional money recently. The gold price making a quick, swift move back up here today. Again, we'll heavily rely on what we get in terms of news numbers. And I put together a video. It'll be coming out later on in the day here on the channel. My editor has it, so we'll have that out to you guys at some point this later today. The video is all about gold and the bull bear case currently. So I won't go super in depth on the bull bear case here currently on gold. My personal opinion, I'll cut to the short version. I am generally speaking more bearish on gold than I am bullish. However, price action is not super in accordance with me at this point. So what I noticed is last week, you can take a look at gold's price action. If we're just going to focus on the chart for a second, we had an explosive move off of the lows. Buyers came in real strong. And of course, with the situation, the conflict and crisis in Israel right now, gold shot up much faster and much further than what many traders were thinking, right? So shot to the moon here real quick. And the question is now, is that going to continue? Well, again, I think from a price action standpoint, it does look short-term like it's got some strength. It looks like it might be due to retest some higher structure points. If you're a day trader, if you're short-term, again, the momentum seems pretty strong for gold right now. And it does seem like it probably could see a push up to this 1945, 1950 area where we have some resistance looking left. Now, I mentioned that I'm bearish, so Nick, why not short it right now? Well, here's the reason why I'm not. Again, this candle right here, that is an incredibly strong candle, and I have a hard time when it comes to, not even just a hard time, I don't like to short something that is going straight up like this or buy something that is going straight down. I like to wait for some sign of structure, some sign of a pullback at least, you know, either direction. So
want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Euro, I've got my chart all marked up here already. This one's pretty straightforward, right? So a pullback to the 38.2 looks interesting. That's where I would probably imagine you could probably see some continuation. So if I was to take a trade, it would probably be short biased on the euro at this level. Now over on the right hand side of the screen, you can see my position. I'm currently long NASDAQ. This is of course the QQQ's ETF, which is the same thing as the NASDAQ essentially. So I'm long NASDAQ, and this has been a trade that I'm in since Friday. I held it over the weekend, which admittedly was risky with everything going on in the world. But I figured, you know, we might get a little bit of a bounce back here at support. So we'll see how this one wants to play out. But that is a trade that I am in. Again, I've taken 2 losses on this one previously. So as always, please do not just copy me. Please do not look for me to be a cheat code, because I certainly am not. I'm a trader. I'm not a fortune teller. I'm not a wizard. I'm not a magician, right? Many times people overestimate somebody on YouTube thinking that they couldn't possibly be wrong. I can be wrong all day long, and still I'm risking small enough on my account to bounce back and find the right trades that I'm supposed to take, meaning I'm like everyone else capable of having a losing streak or a drawdown. So I am bullish on NASDAQ. We'll see if I'm correct about this. I like this area of support, and my stop loss is below structure over here at 14,800 approximately. So if I'm out of this trade for a loss, then I'm out for a loss. And again, I'm very willing to take that loss if need be. And perhaps from there, I can find a better entry point later. So again, I like to leave that disclaimer out there because a lot of times, you know, you get people on social media who they'll only show you their winners and you start believing that they're indestructible, right? Nobody is indestructible. And anybody who says like, oh, I only take a loss every once in a while, absolutely nonsense, right? Markets are not that predictable. If anybody could predict the markets with absolute, you know, like 90+% accuracy, if that was real, first of all, they definitely wouldn't be on social media, right? They'd be hiding their secrets completely. They would not reveal anything. And second of all, the markets just have too many variables to predict all the time. You know, if you're arrogant enough to think that you can predict what the market's going to do all the time, here's something to think about. You don't know what the Federal Reserve is going to do next. You don't know what's going to happen next in Israel. You don't know what Russia is going to do next. You don't know what Saudi Arabia is going to say next about OPEC and oil prices and things like that. There are so many variables in markets. To think that you're going to get it right all the time is actually pretty lunacy, right? It is crazy. So my point with that is you don't need to be a magician that knows what the market's going to do all the time to make money in the markets. You can be reactive, risk small, and trade like a conservative person, right? You gotta be cautious with the stuff, not you know, wild with it. Okay, so again, that's my message of the day: is don't be you know, a superhero trader, or try to be. You're more likely to blow your account that way. Highly suggest be reactive to the markets. Understand that you don't know everything, and that the more modest you are in trading, the better you're going to be. Because again, yeah, really important. Anyways, guys, we did get the number. I'm sorry I missed it again. We got minus 4.6, which is, of course, slightly better than expected. So let's see if that impacted the dollar in any way. In some ways, it might be slightly positive for my trade on the NASDAQ. Again, showing strong economy is not necessarily bad for stocks, right? In some ways, you could argue, well, that means the Fed's going to do this and that and the other. But the point is, it's still decently good for stocks to see economies that are strong. Anyways, dollar index slightly impacted. Let's go to the 1 minute chart just to see if there was any significant spike. Not really. You can see it didn't make too much of a difference here on the charts. And again, this is the thing. Sometimes you get very surprising numbers that cause massive spikes, and other times you don't. And it's okay that you don't get a spike every time. You know, unless you're some sort of adrenaline junkie with trading, it should be okay for you to not see a spike every time you get a red folder. Regardless, thank you guys for that on the update, reminding me to catch the breaking news, even though I was a minute late. Let's talk forward now. What's next? Well, again, I'm still holding on to the NASDAQ trade. Everybody keeps asking me about gold. What's it going to do? I told you, you know, if you watch my Sunday video, or if you were here just a few moments ago when I was talking about this, I'm waiting for a true sign of rejection, perhaps like a lower low or a lower high. I got to see some sort of give on this major green candle. But then I am generally more bearish than I am bullish. And I'll go to the EDGEFINDER for this for a second. I'll show you, I'll walk through for a second some of the indicators that I'm seeing here on gold for us. Again, gold's price action short term, it made a real good stab to the upside, broke above this area. So I'm not short right now on gold, right? I am very much waiting to see what it wants to do. Okay. By the way, gold is up. Let's see, what is gold up? Yesterday, by the way, these are prices from the stock exchange, which has not opened up yet in the US. Just a reminder of what happened Friday. Silver was up 4%, gold was up 3.2%, the VIX was up massively. What's the VIX doing this morning? That's actually probably a good question to take a look at. The VIX spiked up on Friday, has come back a little bit since then. So we'll keep an eye on this. So gold is kind of still neutral. The trend to the upside is what is really kind of pushing back on bearish stuff for me. However, the COT data was really bearish, and we should probably take a look at COT data. Let's take a look at that together. So we'll pull this up, take a look at the COT together on this. Again, in terms of, let's take a quick look at US 30. US 30 is trading up this morning. The NASDAQ making a slight push. The S&P slight push as well. Gold slightly down on the day. The dollar index mixed to down a little bit. Euro dollar pushing up a little bit. Yeah. So again, currently only trade that I have on momentum style. I have two strategies that I run: an option strategy and a momentum trading strategy, which is what most people on this channel are familiar with. Momentum style trading, I have one trade open. It's the NASDAQ trade that you can see on the far right hand of the screen. So, okay, let's take a look here. Smart money tracker. So if you guys don't already have the EDGEFINDER, what we're looking at is the commitment of traders data. This shows us what institutional money is doing as of the latest filing. We get this weekly. Each Friday we get an update. So if you haven't seen this already, then stick around with me for a few minutes. We'll go through it and I'll show you what the COT data showed us this week. It's actually really interesting data. So first of all, you got two sections here. You got the net institutional positioning. This is showing us overall, what do the books look like? Our institutional money, long, short, dollar, gold, US 30, etc. And then the second section we'll get to in a second, which is the non-commercial change week to week. So what was the latest moves they were making? Okay, so take a look. We've got yen still on the far left. The Australian dollar still very bearish. CAD still very bearish. US 30 still very bearish. Bonds still very bearish. The Swiss franc still bearish. On the flip side, oil, interestingly, still very bullish. And this is, part of the reason why, I'm very interested in possibly looking for oil trades if I can find them. US dollar, still very strong from institutional money, right? The Nikkei, the euro, gold, but stay with me on gold because I want to show you guys something. Because if you looked at this number, if you only looked, here's something to think about. If you only looked at the top section here, you might draw the conclusion, oh, look, gold looks really bullish. That must mean that institutional money is backing gold, and so we should buy gold, right? But stick with me because I want to show you something really important about this, okay? If we scroll down, this is showing us possibly even more important data right here. This is showing us the latest filing from institutional money. So now we have the data. Now we have the moves in front of us. And what we can see here is that if we take a look this week, NASDAQ was supported. I really like to see this. So again, I'm long NASDAQ, so I'm happy to see a nice supported week-to-week change. They increased net positionings. They were bullish, right? So I like to see a bullish shift here a bit in the camp of the bulls, right? So in terms of I guess where we are going from here, you also have the US dollar, right? So the US dollar also showed a sign of bullishness. Now hold up, because again, remember we talked about gold. If a strengthening dollar is happening, that's not great for gold. So let's go take a look at gold. Well, gold it's the most bearish on our list this week. So the data shows positions have been moving bearish overall from institutional money recently. Not only that, I can show you the week-to-week chart. So now we get even further. We've spent obviously a lot of time building on these tools to make them really, really readable for our users. But I want to show you this. So on gold, this is gold and it's COT data week to week for the last several weeks. So what you can see is that the blue line shows the net long percentage versus short percentage. So clearly what you can see is institutional money has been bearish, net bearish on gold. And at the very same time, look at the US dollar, it's net bullish on the dollar. Okay, so this is a really creepy thing. If you're a gold bull, you have to be very cautious about this. Institutional money, you're going up against the pros right now if you're super bullish on gold. The pros are bearish. So I mentioned, what I'm looking for is, even though all of that to say, even though the COT data showed us some institutional bearishness, I'm still waiting to see lower highs, because here's something that I don't like. What I don't like is how strong this green candle is right now, right? There's so much green on this chart and the price action looks really bullish. So I'm not going to short something that has technically a bullish chart going on for it, even though the COT data points bearish. Okay. So that's something to acknowledge. Let's take a quick look at retail sentiment also and see if we notice anything. Australian dollar retail traders are betting long. Dollar yen retail traders are betting short. This is information that is useful because, again, if you know retail traders are piling into one side of a trade, for example, let's pull up that dollar yen and talk about it. Dollar yen retail traders are very much betting against this chart. They are short dollar yen. Okay, that is for me actually a bullish catalyst to possibly look for long setups. And I don't even hate this idea currently where we sit. I think there might be a decent opportunity for dollar yen. I mean, I would like it to pull back a little bit to the 38.2, but even where we currently sit, there is at least some supportive price. So I'll watch this one. If I do take that trade, you guys will see it inside of the Discord channel.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.